January and February, we came out like gangbusters. And then we saw some real measurable softening in March, as I think the consumer adjusted to how fluid the macro factors were. April, we started to see some recovery.
That was Marriott CEO Tony Capuano on Money Movers yesterday. He also said consumers are being more mindful about spending right now, which my next guest says could be a boon for the cruise lines to grab more market share. Let's bring in Laura Champine, senior consumer analyst at Loop Capital. And Laura, you just upped your price targets on a couple of these names. Your take is becoming more consensus. I mean, more and more people talk about it. Like, yeah, it's kind of a value-driven vacation item. So I'm just wondering how much more upside there might be in the stocks from here.
So we raised estimates for the current quarter and took our price targets up for Royal Caribbean and for Carnival. Royal Caribbean, we have a $290 price target, so still pretty significant upside there. We spoke to Carnival last night, and Carnival has, with all of its banners, about 50% of all cruise cabins in the industry. So they're the biggest player by far. And they said they still see a 25 to 40% discount on cruise vacations compared to comparable land-based vacations. So as people get more sensitive to that value proposition, we think the cruise industry has a lot of room to grow its share.
What do you think is priced into the cruise lines right now? You know, I mean, in order for that to go well, for the people who are late, you know, to the call, can they feel comfortable sitting in these for a while?
We think so. We think for Carnival in particular might make sense to wait. Carnival has a big private destination that comes online in July, and it will take a while for word of mouth there to grow. So you might have more upside in Q4 for Carnival. But we like Royal Caribbean because we see double-digit growth there this year. We like Norwegian because the stock is just very cheap, even though their growth's likely going to be less than RCL. We like Viking, that higher-end customer with leadership and river cruising. All in all, I think this is a space to own, and I think it is a space that you can own today.
Yeah, Royal Caribbean is up 15% year to date, where Carnival is down about 6%. So it's not as if all the cruise lines have been going gangbusters or anything like that. It's interesting because you see Royal Caribbean leapfrogging Carnival and adjusted EBITDA next year. So what accounts for that growing difference?
Sure. So Royal, it's hard to tell what's marketing and what's real. So Royal has that perception of having the best ships in the business. It does certainly have a lot of new big ships with a lot of features. They have Perfect Day at Coco Cay, which is basically a water park for kids that looks very exciting. They've got a hot air balloon that leaves from there. So whether it's just marketing or it is truly the product, we think all the cruise lines have great product. Royal is having an easier time filling those ships and is a little more disciplined about pricing. We think their close-in discounting is still down year over year. So prices for the cruise lines, even though they're a great deal, they're holding in nicely, even though we are in sort of a choppy travel market.
Yeah, I remember when Seema went on some of those new ships, there were tons of water slides and everything behind her. It looked fun. And you think Texas is a market to watch increasingly with Galveston?
Texas is underserved relative to, you know, the big ports in Miami. Florida has really been the base for most of these cruise companies, but there's still just as much population that could easily get to Texas as opposed to Florida.
Yeah.
We think that area is going to grow, and we think Royal Caribbean's doing the right things to put its assets there to take advantage of that growth.